This is ATFX. My name is Gonzalo Canete, and I'm here one more time to give you the best update of TSM, Taiwan Semiconductor Manufacturer, one of the biggest and most important companies nowadays. The company for in the eyes of many of other analysts, the company is feeding the AI fever, the new golden fever of artificial intelligence that we are seeing in technological sector in Wall Street is feeding by this company, and a strategic company. I'm preparing a presentation. There's one I'm going to share with you now to give you the key factors to understand what's the situation of the company. And as usual, I'm going to start to giving you more like a fundamental perspective, what the numbers are saying, exactly what's the situation of the company, expectations, future projects, challenge the company has in ahead. But we are going to end this report with the proper numbers. We're going to study the balance sheet, the financial situation of the company in terms of leverage, liabilities, assets. And also, of course, we're going to check the technical analysis. I'm going to share with you my view on the chart to see exactly what is the key prices that we should keep on our radar to in order to consider this company as an asset in our portfolio, or if you are considering to buy or hold or sell this company. Don't do it until you see the end of this video. Let's go into details. Let me minimize my screen, my camera, so you can see all in details. Now, this is the Q3 expectations, the Q3 evolution of the results. I'm going to try to keep this short. Exceptional sales growth. It's amazing, 39% over the results compared with the last year. So year to year, compared with the last September, the company has increased in 39% the incomes in September. What else? We also got a revenue, expected revenue of 23.6 billions. Has been exceeding. I'm going to give you that detail later. Let me see if I can change actually the screen because we don't see clearly the point 3, which is geopolitical risk. But clearly, I was saying, clearly one of the factors that is determined in this case is like 20 times for the last 20 consecutive periods, the company has beaten the expectations, which is an amazing statistic, an amazing trajectory. In geopolitical terms, geopolitical risk is so obvious. The company is based in Taiwan, is manufacturing in Taiwan, all the production, and therefore is under the risk of Chinese-U.S. tensions, China potential invasion of Taiwan, U.S. feeding weapons to Taiwan. So all of these cases, like a kind of the territory could be a reason for a new proxy war between U.S. and China based in Taiwan. So again, that's the main geopolitical risk. Key manufacturer NVIDIA and AMD, as I mentioned already before, a strong growth in cloud computing. We also gonna study the perspective of self-driving systems, especially with the presentation last week of Tesla and the new robo taxi project from Elon Musk. All of these factors could be important. Stable margins. We also got potential additional costs from AI chips investment. We will see now, but the investment they need to make in capital is growing because the expectations by Intel, by AMD is rising, considering the announcements from Tesla, for example, of using NVIDIA microchips for self-driving systems. They need more production, and therefore Taiwan Semiconductors need to invest more capital on increase the production. Revenue, we have mentioned that it has been beating the expectations period after period, which is good. Analyst prediction is $1.79 per share, which will represent 39% of the growth. TSM has beaten earnings estimations for 20 consecutive quarters, which is amazing. We also operated cash flow. TSM passed conservative guidance. This is a very important thing too. Obviously, I cannot give you all details I prepare for the report, but this is another thing is interesting. The perspectives the company has been presenting over the years is actually really conservative. That's why probably most of the time they are beating expectations, which is good because they're not trying to blind the investors with nice numbers. They want to be realistic and give us exactly what could be a realistic results. As I say here, growth drivers, autonomous driving system, mainly because all the companies are trying to develop the self-driving system in the cars. Electric cars, electric vehicles going to need this kind of technology, and therefore they estimate that not only United States, not only Tesla, but also China and all the manufacturers, car manufacturers, electrical vehicles manufacturers in China are demanding this kind of technology. Intel issues strength TSM position. Also, the issues experienced by the company Intel has been a positive factor, I would say, for TSM because obviously has been increasing the position they have in the market with low competitors, so with low pressure from a competitor like Intel. Execution risk, low risk, excellent past execution and performance, operational efficiency, geopolitical concerns again, Taiwan and China tensions, potential impact on supply chains, obviously, because if something happens in Taiwan, definitely will affect the traffic. You know that Taiwan is super close to the Chinese coast, and therefore any potential conflict between them, China could easily establish a trade block, sanction blocking all the traffic, all the trade between Taiwan and the rest of the world. Global companies, similar risk for Apple, Tesla, and luxury retailers. Apple and Tesla are producing in China. If there is a conflict between Taiwan and China involving United States supporting Taiwan, it means like at some point companies like Apple and Tesla should also experience troubles because Tesla and Apple again are producing from China, in China, located in China. AI foundry status, NVIDIA and AMD demand, highly demand for AI chips, result production issues, Blackwell chips, improving forward guidance clarity. That's the improvements of the company. They also expect high demand by AMD and NVIDIA, doubling capacity to improve supply chains, global expansion, Europe and Middle East potential, foundry exposure to diversify geopolitical risks. Eventually, what they mention is they're going to try to produce this technology also in other locations just to reduce the geopolitical risk. Forward ending multiple trading 28 times for 2024. The value of the price of the stock based on the quotes 20 times more, and the expectation should be that the next year will be lower. Market view, anticipation of breakout and sustained growth. We need to expect, you're going to see now in a minute in the charts, but we're going to also wait for the right momentum in terms of price from a chart perspective. Key takeaway, top AI beneficiary with robust growth and dominant market position, is the top company in the world in terms of AI and semi-production. Even companies in China, they mentioned that in the next years they will be able to produce the same technology in China, but this is something we need to wait until we see it. From a financial perspective, we can see the assets in short term and long term are much bigger than the liabilities, which is telling us that it's a low financial leverage in this company. They got enough assets to support the liabilities, and therefore it's good news. And from a financial perspective, doesn't seem to be a company under kind of immediate risk or urgent risk. In terms of equity, book and debt book, as you can see, the evolution of equity is faster and is rising stronger than the evolution of liabilities or debts. And therefore, again, from a financial perspective, this is a good news. And finally, from a chart perspective, let me see if I can search with you. That's what I was looking for. Now, in this chart, we can see clearly this is long term. The huge expansion in terms of price started in 2019. As you can see, 149.50, $150 per share. It was the kind of barrier frontier that it was broken over this year, and therefore it was a high correction, more or less reaching the 50% of that range, which is exactly a symmetry of the previous one, excluding these dilatations here. So I was trying to make a projection of exactly what could be the next move of the price in best scenario, best case, and it's giving us $215 per share, the best case, and in the best situation. Now, in terms of a correction, if something goes wrong, I believe $190, $185 probably will be a support. Still, we need to see this company breaking out the barrier of $190 per share, and therefore, if that will be my case, I will. If I got on portfolio, I will keep on hold and see what happens in the coming weeks, and especially after results. And in general terms, if I won't be already in this company, if I will be considering take a position in this company, I will wait probably until $149.50 per share as a support, clear support that could bring us new force in terms of buy, new buys, and then therefore an attractive entry on the market. In some terms, we can see a very similar evolution. You can see that the company has been rising firmly since September, and therefore I believe the breakout we have seen. You can see how the correction was moving in the last few hours. Everything seems to be in the same direction. We're probably going to face a new trend moving the company to those $215 per share. That's all. This is a technical perspective, but I believe with all of this, you got a clear idea of what is the situation of the company. And again, good luck. If you like this video, give me a thumb up to know that you are there. Also, leave me your comments if you want to add something or suggest anything else for the next coming reports. And if you are not subscribed, please subscribe to the channel. Bye-bye.